right now, and you're still in Rhode Island, correct?
Yeah, I'm in my bucolic crypto collateralized compound in a secret location somewhere outside Providence, Rhode Island.
That's good. Anyway, so I wanted, well, first of all, what do you think of what happened this past weekend with the crypto markets? I've heard supposedly that a lot of people are liquidating crypto assets in order to cover losses in the stock markets.
Yeah, I mean, I don't know much about covering losses, but yeah, I mean, definitely some people are fearful. They're selling off, some people, retail sellers, I'm sure, are liquidating their entire position or part of it. I think for me, I'm like a grizzled veteran in this space. I've been here so long, I remember seeing Bitcoin go from 20K down to 3K and all these other wild things, and I've never sold. I'm a long-term believer. I made a lot and lost a lot trying to time the markets before, so I've always been dollar cost averaging into my core positions. I think, yeah, I looked over the weekend. I think Bitcoin, Ethereum, Solana, a lot of even the big caps were down 20 to 30%. So,
Which is
yeah,
crazy for the stock market, but crypto market is not that's not as bad in the it's not that bad in the crypto markets, right?
yeah.
As it you make it
Honestly,
seem.
most of my, I'll be honest with you, most of my investments are in crypto and all their alternative assets. So maybe I've been less affected by the stock market. I don't even know what the stock market's doing, to be honest with you.
We're about to figure out because the crypto market's 24/7, but we had that bad day Friday, and then yesterday evening in the US, I saw that Tokyo was basically crashing in pre-market, and right now, like the post-market is like really bad. It's like one of the worst days since the 1987 recession in Japan that lasted like 30 years. So
Yeah, yeah, it's weird. If doing it in Japan, I know. Like I've been, as you know, maybe some of the listeners will know as they learn about me more that I'm really into like Austrian economics and how money works and stuff like that. And like if it's happening in Japan, it wouldn't surprise me. There's like a really big issue with the yen and how they've been managing their yen and how they've been managing their fiat currency. Like a lot of countries, they have a central bank thing, and they think the yen's going to unwind. It hasn't been performing well, and it's really surprising. It's not like it's not like Argentina or Venezuela or Zimbabwe or Nigeria where the currency has issues. So yeah, and it's a big economy, so it could really have global ripples. So it's interesting to see. I know obviously, like you said, crypto markets are 24/7. And it seems like stock markets are trending that way. There's like early market trading, or like you can trade in the early
post-market.
or after market hours. Um, yeah, I mean, one of these days I'll probably have to diversify more into the alternate, traditional assets like stocks and bonds. Um, but yeah, I think if you're fearful, you should hunker down. I think one thing is sometimes people wait for it to go way down, and then it stops going down, and then they've kind of worst of both worlds. They're holding it, it
Yeah.
goes down, they sell, and it starts coming back up, and they've just kind of been caught in like a bear trap. So
Yeah, so and my brother told me to actually sell some of my crypto assets earlier in the year. He's like, you could sell it, trade it. I'm like, listen, I tried doing it. I was on and off for like a couple of years in the crypto market. Really got serious like 3 years ago, and I learned that that's how you get wrecked by trying to time the market. There's people that say that timing the market beats timing the market because most of the time you're going to be wrong because there's so many,
yeah, yeah, I
so
would say
many
like.
factors.
Yeah, I've been in like a lot of volatile, previous markets before. I would say the toughest one though is like I almost sold when it went from 20K to 3K. It was painful because you think about it, you're losing, just I mean it's going down 90%, 90% plus, and it's like you're just watching it, and like the only thing that I had to go on is my fundamental analysis, my belief that it's going to recover. You know what I mean? Like right now, like especially because me, I got into these positions fairly early, so pretty much all of them are
Yeah.
green. Maybe some of my altcoins are down, but like I got into, some of my core positions quite early. So for me, I'm still in the green, even if it goes way down. If it goes down to 50K, 40K, if it goes down to 30K Bitcoin, I'm still in the green. Same thing for a lot of these other assets. So But for other people, if they bought at the tippy top, they bought at 70K or something, they bought multiple Bitcoin or something, they're down
They're
20K
getting
of
wrecked.
Bitcoin.
Yeah, they're
And
getting
they could be
wrecked.
more. But my advice to them would be to maybe try and accumulate more, buy the dip, and
So just
that's a very
lower that average, right? Because if you buy
yeah.
at a lower price, lower the average.
Yeah, I'm not financial advice, not legal advice, but yeah, buy more because I think it's gonna, go back to that all-time high and go above it. You know what I mean? And we've seen this too. I'm not necessarily a Bitcoin maximalist, but you saw this like all these critiques of Michael Saylor, like, oh, he's underwater, like, oh, look at how much he bought
Mhm.
the Bitcoin for, look what the price was, and then all of a sudden he's up multiple billions of dollars. And I don't know where MicroStrategy is now. I mean, maybe I don't know what their average price was, but I think it's still below 50K. And
Yes, that's correct.
they might be selling a bond or doing another note or debt offering to buy even more Bitcoin if it
They
goes
are.
up.
They're doing that. They're doing that. They just got $2 billion, or they're preparing $2 billion to sell. Well, they're selling some of their stock to get 2 billion to buy more Bitcoin, and it just by coincidence that was announced 2 days ago. Well, Friday, 3 days ago.
Yeah, yeah,
Good
that makes
timing.
sense.
But okay, so let's get into the topic. I know you have to go, and I have to go pretty fast today. So crypto dust. I'm not very familiar with crypto dust. My understanding is crypto dust is like little pieces of crypto that get lost in the crypto space while you're transferring from one wallet to another. But can you give me a better understanding of what actually it is? At a high level understanding, but simply enough so people can understand, like myself. I'm not a technical expert on this stuff. I'm just like a guy that's really learning every day. I know you are too,
Yeah,
but you're further along your journey than I am. So what is crypto dust, and then why is it good, and why is it? What are the good aspects of it, and what are bad aspects of it?
yeah, definitely. I've researched the topic of crypto dust and familiar with it using wallets and written some articles about it. So yeah, there's a lot of things that we could talk about with crypto dust, but basically the way to think about it is maybe an analogy with fiat currency is it's like um, with crypto transactions, Bitcoin or Litecoin or Bitcoin Cash or a lot of these other blockchains. um, Basically, you send the crypto, and there's also a transaction fee that goes along with it. You know, sometimes when the blockchain blocks are full, and with Bitcoin and Ethereum, that transaction fee can be kind of high. That's why I kind of don't like those chains for certain applications.
I
For other
agree.
chains, the transaction fee can be very low, fractions of a penny. Typically, some blockchains have completely free transactions. In that case, there wouldn't really be crypto dust. But a lot of the big
So that's
chains,
called that when it's free. It's called zero proof, right? Is that what it's called?
Um, not zero proof, but it's just like there's no transaction fee. I don't think there's a lot of chains that do that. One issue with no transaction fee is like you can like spam the network. There's no cost in spamming the
Yeah,
network or
so
sending a
the
lot of
robot bots can get on there.
transactions.
Yeah.
But I'll give you an easy example. Let's say me and you made a transaction. Let's say I wanted to buy something from you for half a Bitcoin. I'll have these wallets with different amounts of Bitcoin and different addresses. So let's say I had one Bitcoin in a wallet. Basically, in general, when you have an amount balance in a wallet and you're sending it to someone else, you kind of subtract it and it gets sent back to you. So, for example, I have exactly one Bitcoin in my wallet. I'm sending you exactly half a Bitcoin. Basically, the way it works is I'll send you a Bitcoin, I'll send you the half a Bitcoin plus a transaction fee, and then the rest will be sent back to me. So maybe I
Is
would
that
get
crypto
like point.
dust? What's sent back to you? Is that crypto
No,
dust?
no, no. Let me
Okay.
continue. This is the example. So I'd send it
Okay.
to you,
Sorry.
and then maybe I'd get back like 0.49087. So basically half a Bitcoin left. But let's say I wanted to send you half a Bitcoin, and I had like 0.50073 Bitcoin. In that case, I might send you the whole half a Bitcoin plus a transaction fee, but there's very little left over, and that sent back to me would be dust. It might be like
Okay.
0.000348 Bitcoin or something like that. So generally, it's when a balance gets close to zero, and it's so little amount in Bitcoin. It's satoshis. With Ethereum, it's GUI, usually called ETH. It's the amount is so small that it's basically unusable. So for Bitcoin, it used to be like A lot of wallets would have a dust limit. So with Bitcoin, it used to be, it's changed a lot because the transaction fees have gone up. But like the dust limit used to be like 546 sats, um, which is a small amount of Bitcoin. That used to be like 6 or 7 cents. But basically, if it's so small, it's unusable. So if it's on a wallet, you really can't use it unless the transaction fee goes down. On a lot of old exchanges I used to use, there'd also be dust. I'd be making changes, swapping between Bitcoin and Ethereum or Bitcoin or BNB using Binance or something. Some exchanges would credit you for the dust. They'd give you like their own native token, like BNB for Binance. Some of them wouldn't, but it's basically a bunch of minuscule amounts that's left over. On Bitcoin and Ethereum, when the transaction fees are high, that can be a significant amount. At times Bitcoin, the transaction fees $5, $10. It's been up to 50 or even more during really high peaks of activity. So in that case, if a Bitcoin transaction fee is $50, you need at least $50 worth of Bitcoin. Otherwise, you can't even send a transaction. That's the cost of, it's
Yeah,
basically
expensive.
trapped on the wallet. For other change, it's a lot less. So yeah, in general, like for change with low transaction fees, the dust limit's just like fractions, micro fractions of a penny. It's like not even worth thinking about. So that's one thing. And then the other thing worth mentioning is that there's like, maybe you hear about it less these days, but like a dusting attack.
Yeah, that's what I really want people to understand because I heard that that's a big issue, like people getting hacked.
Yeah, so there's a couple of reasons you do a dusting attack. In some cases, it's not really an attack. Sometimes they used to do it as like almost like promo or marketing. Like a new project or something would like dust a bunch of wallets and be like, to give away crypto or a free airdrop or just like to let you know about a project. In other cases, a dusting attack is like it could be maybe potentially used by someone who's trying to steal your crypto. It could also be used by like a government or like a blockchain analytics firm. The way that works is that most blockchains, they're pseudonymous, which means you can see all the addresses, all the wallet balances, but you don't know who they're associated with. Like
Yeah.
you'll read these stories online, like, oh, big Bitcoin whale from 2012 transfers 1,000 Bitcoin. You have no idea who this Bitcoin whale is. You just know they have 1,000 Bitcoin. Um, but if you do a dusting attack, basically they might send thousands of pieces of dust to different wallets or more, millions. So they have little pieces of dust on every wallet. So when you send a transaction, they can see where it's moving. And when they all these transactions start moving, they can through blockchain analytics, they can maybe figure out like, oh, this address is connected to this centralized exchange or decentralized exchange. And through a lot of sophisticated analysis, they might be able to de-anonymize you, figure out like who is this person, who has this wallet, where are they sending it to, who's receiving it. So in that case, it's kind of a way to have more like enhanced surveillance of the blockchain, even more than just using a blockchain explorer. You're figuring out like where what's going where. So let's say I knew your wallet and some other wallets. I sent you a little bit of dust. When you make a transaction, I would notice because I know where the dust is.
Yeah, it's pretty crazy. And also, like forensic accounting, a lot of that's happening now with people getting divorced. like, I don't want to put any dirt on anybody's name, but there's a certain individual that is getting divorced, and his wife hired a forensic accountant to find out how much crypto he actually owns. Anyway, the next topic I want to discuss is price discovery. So you can explain. I think you know who it is. So explain what price discovery means to you, and then we'll talk about it in the crypto context of like predictions as well.
Yeah. Well, you know, I mean, I guess in the markets, price discovery is happening 24/7, as soon as, especially, and it really happens much better, at least in the crypto markets, when something's on a centralized exchange, because a lot of the retail and a lot of the big institutional crypto investors don't really use a lot of decentralized exchanges and stuff. But basically, price discovery is happening 24/7. People are saying, oh, I think it's worth this. Oh, that's about right. I'm going to hold it. I think it's worth more. I'm going to buy more. I think it's overvalued. I'm going to sell it. That's price discovery is happening in the market 24/7. I think for a lot of things that aren't like super liquid and have a lot of trading volume, it's hard to figure out the price discovery. Like a lot of early crypto projects, if you're an early stage investor before it goes public, they value a certain project at a certain amount, and you might get in at a good price. They think, oh, it's valued. We think it's worth $5 a token, or $10 a token, or $1 a token, and then it gets released, and it might completely crater. Oh, I bought it at $5 a token. Now it's trading at 30 cents a token, or it could go the other way. So if it's not liquid and trading, it's hard to understand the price discovery. Same thing with a unique piece of property. There'll be some crazy mansion in LA. It's selling for $100 million. It goes on the market, no one sells it, and it's there for years. Okay, it's dropped to 80 million, no one wants it. Dropped to 60 million. Oh, 6 years later, drops to 55 million. Someone buys it. Okay, in that case, at least one person thinks that mansion's worth 55 million.
Definitely.
But when they initially released it, they thought, I think, we think we can get $100 million for this super mansion on the hill. But obviously they couldn't. So in that case, price discovery told them they have to keep lowering the price until someone buys it. Or
All
let's
right.
say, I mean, it could have happened the other way though. They could have released it for 100 million and immediately had a bunch of buyers and that bid up the price to 150 million. So price discovery is the market deciding what something's worth.
Which is actually very simple. I like that. Price discovery is the market deciding what something's worth. So going upside with everything that's happening in the market, when do you think we're gonna have like the new wave of price discovery going up for cryptocurrency and assets? Like, because there's a lot of people talking about the Fed cutting rates, maybe even as early as like an intra meeting rate cut in August, like by emergency, or if not, like cutting it, having two cuts in September, and now they're even talking about having maybe 4 or 5 cuts by the end of December. So obviously, with money printer, you're going to have a lot more liquidity in the market. It's probably going to benefit cryptocurrency more than anything. Now that we have the ETFs, Bitcoin ETF, Ethereum ETF, and the Solana ETF is also in consideration now. So, what do you think is the next leg up in price discovery for this crypto market?
Yeah, I'm not really sure. I did know that some people are predicting like August kind of being bearish. I didn't think it would be that bearish, like seeing what's happened over the weekend with all these prices going down.
Yeah, that-
Yeah, it's hard to say. I do know that like I've been looking at some of the charts, at least some of the sentiment scores, and like there's a lot of like the fear and greed index is trending towards extreme fear. So that tends to mean a lot of sell-offs.
and that means that you and I are greedy, right?
Yeah, yeah. If I had more fiat to deploy right now, if I had more fiat to deploy, I'd probably deploy it when markets start to bottom out sometime soon. Maybe I'm not sure if it'll be the end of August or sometime this fall, but yeah, I mean, I think a lot of people predicted like more of a bull markets, but I think with like some of the stuff happening in the TradFi world, it's really affected the crypto world as well. Um,
And also a lot of uncertainty. Like I know that they said, I'm not sure if you want to have an opinion on this, but they're saying that there's a possibility that Xi Jinping might have had a stroke in China and 40 banks are locked down. You never really know what's happening with China. They keep everything very secretive. And you also have what's happening with Iran and Israel. And the markets seem to not really like uncertainty, right? Especially the U.S. election that's coming up right now. We don't even know who's going to be the VP for Kamala Harris or
yeah,
Kamala. Sorry. Go
Yeah, I
ahead.
think there's definitely a lot of uncertainty in the market, and yeah, all these geopolitical factors certainly don't help. I think one thing that's interesting in the crypto market, maybe a little bit of a tangent, but with the election and the who's going to win or what's going to happen in the U.S. is like there's been a crazy amount of betting volume on places like Polymarket on like who's going to win
Yep.
is and one thing about prediction markets is they tend to be actually more accurate than polls, and obviously that they
Yes,
fluctuate.
very.
Kamala might pick the VP and she could be predicted, even a lower chance of winning, or she could pick a VP and might give her a higher chance of winning. And that's really all very interesting stuff. But yeah, the market doesn't like uncertainty, but also that's when, savvy investors can really, do well. You know what I mean?
Capitalized, definitely. So
Yeah.
Polymarket, that's a crypto or a blockchain predictive technology, correct?
Yeah, there's a lot of crypto prediction markets. I think like Augur was one of the first ones that was maybe on Ethereum. I think I can't remember where Polymarket is. It might be on Solana or something. But basically,
Yes, I love
it allows
Solana.
you. Yeah, I mean, it allows you to basically wager on almost anything. Obviously, there's sports betting outside of crypto betting markets, but like these markets, you can generally kind of, as long as there's a counterparty or someone willing to bet with you, you can bet on just about anything. The U.S. election is a very popular one to bet on. But you can bet on anything like, oh, will Kamala and Trump debate? Who will be the VP? But you can bet on anything. You can bet on like, what's the weather? What's the average temperature going to be in Phoenix next month? Like you can bet on like literally the weather, elections, literally anything where like an oracle or something can like determine the winner. You can bet on it. You can bet on, oh, how many days will it rain in September? Like you can, as long as someone's willing to bet on it, you can bet on it, which is really interesting. I think it helps you better determine like the weather, elections, even better than sometimes polls. So it's a really interesting use case. One thing I should mention though is like with all the issues with rules, especially in the U.S., not being able to buy ICOs and stuff like that back in the
Yeah.
days.
Rough.
A lot of these prediction markets, it's odd because sports betting is becoming basically ubiquitous in the U.S. But in a lot of these betting markets, basically, like the only citizens they ban are Americans, or maybe Americans and someone else, like because of the U.S. and the way they have the regulatory stuff. Americans aren't typically allowed to use those prediction markets, which is kind of a bummer. So a lot of this betting volume on the presidential race is like happening from like people from other countries.
Yeah. So anyway, price discovery. Do you think that like things are going to start to do better traditionally because they do better in October, right? Every year. Is that when the crypto market really starts to skyrocket, or do you think because of all the geopolitical madness, nothing's really going to happen until after the election? Or
Um, yeah, I don't think it really depends on the season. A lot of these bull and bear market cycles are like sometimes they're like 3 or 4 years. If you look at the charts, it's not like necessarily like a cyclical seasonal thing. It's like sometimes these bull and bear markets can be 3, 4 years. So Um, I don't think it really depends on the season. I do know, like, a lot of times around like Chinese New Year, there'd be a big sell off because a lot of the Asian investors are like selling stuff
yeah,
to like buy gifts and stuff like that. That's like the only cyclical
which
thing.
is ironic, right? Because cryptocurrency is semi legal in China, but they still own it like crazy.
Yeah, so like there's like that. There's always, I mean, maybe less so now because the market's so big, but there was always like back in 2016, 2017, 2018, maybe 2019 as well. There's always be like that cyclical, like, hey, people are going to dump their crypto, before Chinese New Year to buy like gifts or buy gold or something like that. Um, yeah, as far as timing the market, yeah, it's really hard to tell. One thing that I think is kind of interesting and kind of tell what other people are doing is you can look at the charts, you can look at the prices, the price discovery, you can look at the fear and greed index. One thing that tells you that people are hunkering down, I mean, maybe they could be selling their crypto into fiat or other stuff like, we've talked about before, like off air in earlier calls. But another thing too that can tell you that is the size of the stablecoin market. Like I haven't looked recently, but a lot of these during these bear markets, like USDC and Tether USDT, like their volume just explode because
Yeah, they're up there.
people are selling some portion or all of their allocations and things, even like Bitcoin, ETH, Solana. They're just putting in stable coins because they want to be back in, but they're waiting for the drop and then they want to buy back in. So yeah, as far as the recoveries, it's really hard to tell. I think interesting thing about the election though is like people are actually becoming involved. A lot of Silicon Valley people who were Democrats before are now supporting Trump. A lot of big donations from Jesse Powell at Kraken, the Winklevi twins from Gemini. You're getting a lot of crypto donations, and I think that's bullish for crypto, especially in the U.S. and worldwide, because the U.S. crypto market's so big. There's so many people with capital here to deploy into the crypto market. So I think a lot of people are like speaking of price discovery, it's kind of hard to price in, but if Trump wins, people are more bullish on crypto. It seems like that seems to be like the overall sentiment score. So, I mean, maybe it could be somewhat election dependent. I don't know if it's going to start a bull market prior to the election or afterwards, but I think Trump winning is probably going to boost prices a little bit. And there are people saying that Kamala is not as anti-crypto as Biden, but I think kind of the damage has been done. I mean,
Yes, it's by saying the administration. She's basically the main advisor for the administration. It seems like, or that's the appearance that they give out to the public.
yeah, yeah, I think it's too late. Kamala didn't go to the Bitcoin conference where RFK Jr. and Trump went, and yeah, some of the biggest. I mean, it's kind of there are anti-crypto Republicans and pro-crypto Democrats, but it tends to skew Republican, I would say. One of the worst is Elizabeth Warren in Massachusetts next door. So I think a
Well,
lot of
we had John Deacon as our first episode guest after he had declared, and after basically he was full force going into the election season against Elizabeth Warren. Although they have their primary still in September, but he's expected to beat out the opponent in his primary.
Yeah, yeah, yeah. And as you know, I interviewed him at that panel in Providence. Yeah, it's the polls are showing he doesn't have a chance, but the polls can be wrong.
Yeah,
I'm curious what the prediction markets would say. But of course he's got to win to challenge her.
the
But yeah,
primary. Yeah.
even if he doesn't win, I mean, he could move the needle and like at least change the conversation even nationally. Like, oh, these when it's one of those things where if politicians don't know it's an issue, they don't care, or they can, But if they realize, like, wow, there's a lot of younger people that used to be Democrats and now they're like changing parties, or they're not going to vote, or they're going to vote the other party, it can kind of change their approach to how they handle crypto. So that's a really interesting thing.
You never know, right? It'd be interesting to see what Polymarket says, like, or was it Polygon, or what they say with regards to that, because honestly, you really never know, and it's a possibility that he could win because he has a lot of backing from like a lot of the biggest packs in America. Because I think it's called Fairshake, the biggest crypto pack in the country, the biggest actual pack for on both sides, Democrats and Republicans. But while you look that up, Blockade, I have one more question. So you talked about stablecoin market, right? Which is actually a really good segue into the last segment I wanted to talk about pre-market, bull market prep. When you start to sell crypto, right? When you're at that market high, my understanding is the best thing to do is actually buy stable coins and wait it out, and then in the future, like buy back in. Maybe take a little bit of a portion of it, buy yourself, pay the rest of your mortgage. If you make that much, buy a nice car, and then just wait it out in stablecoin market, and then buy back at lower values. So you have actually more amount of Bitcoin, a bigger amount of Solana, Ethereum, etc. What's your take on that?
Oh, you're saying, going to stablecoins at an all-time high?
Yeah, like when you're in an all-time high, what's the best strategy to take profits? Is it to put into stable coins? Is it to take it out in cash right away?
Yeah, I think one thing about that though is it's kind of like the other side of the coin. Like it's kind of hard to time the bottom of the market, and it's also kind of hard to time, the all-time high, because sometimes you look at the old charts of Bitcoin,
Yeah,
it hits the all-time high and it keeps going for another $10,000. So, um, I I would say, like, if it hits the all-time high, you could maybe put in a stop loss and maybe, like, gradually, like, sell tranches of it. For me, it's like I've been thinking about that more because I've just been hodling really since 2017, since I got into my core
not a
position.
bad thing. Not necessarily a bad thing, by the way. You can afford
Um,
to, right? Obviously.
Yeah, so I've been hodling for a long time. I work at a crypto fund where we traded quite a bit more than that. So maybe it's changing my ways. For me, it's maybe risky, but it's also very conservative because I'm not gonna miss these crazy spikes up. So let's give an example though. I mean, I think a lot of investors are psychological for like big numbers. So I mean, you could say like, oh, it hits the all-time high. It's all-time highs around 70K. I mean, it could hit 70K and just keep flying up to like 75, 80, 90. You don't know. So I think that's a hard thing. But let's say it hits 70K, it could go up to all the way up to 100K. Like it could just not stop, and like it goes up, hits the all-time high. You deploying the stable coins, it goes up another 30K. So I don't think that's necessarily like a fail-safe success. I think maybe like a reasonable approach could be like some sort of stop loss thing. Like I think if it hit 100K for Bitcoin, I'd consider selling some because I think it's like people could have big like sell orders at 100K, or they might be somewhat strategic. They might have a sell order at 99K or something. Like, hey, like people are gonna wait for 100K to sell. So that could be something you could do. Like, oh, it's when it hits 100, I'm going to if it hits 100, I'm going to put a stop loss. I'm going to sell 10% of my Bitcoin if it drops to 98K, and if it drops to 94K, I'm going to sell another 10%, and like just like ladder down and keep selling tranches of it as it goes down, and then okay, you're going to have stop losses going down, and okay, if it starts to recover, if it goes up more than 3K, I'm going to put all that money back in, and you can accumulate more Bitcoin. But I think like trying to time the lows, it's hard to time the all time it's well, it's not you're not timing the all-time high, but if it hits the all-time high, it's you can't really know if it's gonna stop or if it's gonna go down, gonna go back up. And I also think it's maybe Bitcoin and Ethereum are gonna be a little bit more predictable and a little bit more conservative because of the ETF volume.
Yeah,
So I think
definitely.
so I think that's another thing is like I think
They
maybe
also might have less volatility, right? You think that it's gonna have less
yeah,
volatility
yeah.
because of that?
So like maybe for altcoins and stuff, I would say like if something hits an all-time high, I wouldn't think it's gonna I wouldn't think like the price is gonna stop right there if I'm selling something that's like a top 100 or top 200 crypto asset. But I think for Bitcoin and Ethereum, if they got all this ETF volume, yeah, if a bunch of institutional investors are buying Bitcoin at 50K or 55K and it hits 70K, they're like, wow, that's a good profit. We're just gonna sell and lock in these gains. So that could really like mute the price run up, at least in the short term. So maybe you want to think about it as like, oh, which ones have a lot of institutional trading volume? Maybe your strategy makes more sense with something that doesn't have ETF volumes or doesn't have an ETFs at all. Maybe that makes less sense. That's just kind of something I thought of, off the top of my crypto head right now. I don't know.
That's fine, blockade, but you have to go to work. I have to go to work. We have to make more fiat so that we can invest in the dips. So anyway, any last words before we get out?
Um, yeah, join the crypto revolution and see me more on World Blockchain Capital. And next time I come on, if I set up the podcast, I'll let you guys know. But inspired me to keep talking about crypto. I used to talk about it all the time, like Bitcoin Jesus, evangelizing it. And yeah, you've re-energized me to talk about it more. Like I've been writing about it the whole time, but I haven't done a lot of podcasts or interviews. So yeah, excited that you got me out of bed early before work, and yeah, we'll have to chop it up again soon.
I definitely say hi to the family. And with that being said, upwards and onwards.
See you on the dark side of the hollow moon later, Mike.
Ciao.